Mark Selby, CEO of Canada Nickel, advancing the Crawford Nickel project towards a construction decision this year and unlocking the Timmins Nickel District, which we believe will be the world's largest nickel sulfide district.
Mark, good to see you.
Good to see you, sir.
London.
Yes.
Nice. It's always different face to face, isn't it?
It's much different. Yeah, it's always much better.
Very good.
Yeah.
Right, we've got a lot to cover. I haven't seen you in Canada Nickel, guys, since beginning of March. I think it was at
PDAC
right?
in person. Yeah.
Yeah, which was a good kind of catch up. But there's a lot you've done since then, right?
Yeah.
And I'm going to start with the money. I got to start with the money. You just announced two financings. One which you sort of previously announced, but we've got one of them over the line with TTN, obviously. Can I just ask a question?
Yeah.
This is I don't know how many. This is the third or the fourth?
Fourth, I think. Yeah.
Usually with a Senko.
Yeah. No, Ormet.
Oh, Ormet.
Yeah.
And you've gone with a new crew.
Yeah.
Why this format and why this type of cash?
Yeah. So at the end of the day, we've successfully used the bridge loans, to a financing announcement. So we did that with Samsung.
Yeah.
We were able to do it to take advantage of the nickel market back in 2022.
Yeah.
And again, debt for exploration companies, without no cash flow, can be a very dangerous, slippery slide.
Yeah.
But in the event that you're bridging to an event where there's potential for higher share price, it just makes more sense to take advantage of the potential for higher share price once you close that news,
right,
and avoid the dilution that's there today. For us, where we are, we're now getting close on government funding. We can talk about the elections and so forth that have happened in Canada and the actual benefit of the big orange monster in the White House right now. And then as well in terms of, really ramping up discussions now with the Koreans, the Mideast groups. And so, we've got, visibility to be able to get that, all those done in 9 months. And so instead of trying to raise $20 million US today,
right,
in today's equity markets, we can, we'll get that money in the bank and repay it, and again, a lot of that money that we expect to raise in 9 months is going to be non-dilutive. So.
Okay, so obviously bridge loans, you've got to kind of refinance those things out. You hope on better terms kind of moving forward.
Yeah.
So I guess it's like an alternative financing in a way, rather than dilutive financing, which perhaps may not excite your shareholders too much.
Yes,
I suspect.
And my own personal
investment
in the
wealth,
company.
Yeah. But it's one of those. It's a sort of strange thing in the market at the moment because we have all had 2-3 years quite tough, expensive capital markets.
Yeah.
If you can get it across the line at all.
Yep.
So this alternative financing, which I think, if I remember back in the days, it'd be you'd have to do some sort of crazy convert or some on really bad terms or some sort of death spiral type structure.
Yeah.
I've seen a few companies get it right. You're one. I put you up as a poster child on this because you went early with this one. So the recent one would be probably Troilus Gold as well. I've done something quite interesting, and a few other boys and girls too. It's been a necessity. If you haven't been able to do that, you haven't been able to move the project forward. And I remind you, Mark, in case you've forgotten, you've moved this at rapid pace.
Right.
Through to a point. We're going to talk about FID in a second as well.
Yeah.
I think remind people of that. So is this a sort of necessary part of mining now? Or do you think we'll have to keep doing this type of funding going forward?
Oh, absolutely. The reality is in terms of actively managed money that you would go, quote, raise equity from, that pile of money has shrunk very dramatically over the last 15 years. It's become very focused on copper, gold, and silver.
Yeah.
And then whatever the flavor of the day is. Lithium had its day in the sun.
Yeah.
A few other metals have had their day in the sun. But then outside of that, if you are not investing the time with either strategic investors, like Agnico Eagle, like Samsung SDI in terms of, potential offtake partners. Again, way out of the box in terms of the First Nations investment that we're, thankfully closing this week with TTN. If you're not, investing the time, and those things don't happen quickly. Again, I wish they took 3 months or 6 months and you could do one trip and get it done. But you're talking about, dozens of trips over multiple years, to be able to get that done. We've now opened up the Mideast, as a new source. I think started talking about that, really 6 months ago. And yeah, I mean, again, just because I talk about it once doesn't mean it happened. So we've met with them multiple times. We're making great progress with those groups. And in terms of, now being a part of the solution, potentially in 2 or 3 months, or potentially 9 months as part of the overall funding package for the project, those options are now there. So if you're a CEO of a company in a metal that's not one of the core ones or the flavor of the month, you have to spend time doing this. Otherwise, you will be dead in the water.
Well, and because a lot of these companies need to work out how to assess the projects for risk. Because mining has a nasty habit of being rather complicated at times, and waking up in the morning and choosing violence. But are these companies equipped to properly assess a project like yours? It's big, it's complex, and there's a lot of money involved. So what do they need to do? What do they need from you?
So, again, having having a team that has a track record of doing stuff is helpful, right? So there's a level of trust that's there. Two, there's the personal relationships that need to be developed, because in places like Asia and places like the Mideast, it's very much, it's not transactional. It starts with a relationship and then goes from there. And then, in terms of due diligence, again, once you sort of go through those cornerstones, then they'll go hire technical advisors, who take a look at the project and say, yes, this works, or this doesn't work. And so, that's, and then again, you have to have, a robust enough project and a robust enough technical team that, when a real set of technical advisors come in, that you can properly answer the questions and demonstrate that you know what you're talking about, right?
Okay.
So that's, that's the key components to that whole.
And also helps that we're kind of at that feed stage. The front end engineering decision is that it was back in March, wasn't it?
Yes,
when we spoke, I think. So again, for them, that the kind of work that's gone into that kind of makes that decision making process a bit easier and kind of speeds up the funding component, I imagine.
Oh, for sure. And again, too, I think, in terms of project development, again, in a quote, in the olden days, 10 or 15 years ago, you had more time to be able to work through the resource stage, work through the PEA stage. But again, to be able to attract those types of investors, you need to be at least at a PEA stage, hopefully a pre-feasibility or feasibility study stage. My life would have been a lot easier and a lot less hectic, if we were able to spread what we did in 4 years out over, 8 or 10 years, which is sort of a typical mining time frame. But again, to be able to attract those types of investors, you need to be well down the curve as quickly as possible.
Right. Okay. It's interesting times, and I think just on those types of investors that we're talking about here, we're seeing a bunch of generalist investors leaning into the space. Like, I know a lot of people want to kind of make those claims, but this is based on not just a green shoots conversation. This is the fact that the markets, the big boys, are reading the macro signals, reading the tea leaves, and working out, well, actually, this is a pretty good time to get back in.
Yes. Oh, no, 100%. I think that one of the biggest shifts that's happened over the last 12 months, so, we're here for 1-to-1 in May. It was a year ago, May, that I had my first meetings with generalists for the first time, I would say in a decade or more at one of these conferences. And again, for them, it's about relative value. When you look at having to buy stock A at 30 times earnings, or 1.5 times underlying net asset value, versus this other sector, that's trading for pennies, 5 and 10% of NPV. Then you look at the overall geopolitical issues here, where you've got supply chains disentangling, governments making it clear that they want China out of the supply chain, and they are going to provide this free leverage, and as much incentive as possible to get that. Again, these generalists go, okay, I see lots of news and news flow and lots of government activity in this space. That's a place where I can make outsized returns. And so it started with a trickle last year. Like last 2 days we had 21 meetings. I would say 5 or 6 of those, are more, generalist funds. And then, outside of these conferences, we're seeing more and more contact from generalist type investors. One of the guys who's a good friend, he got me started when I left Inco. His territory was covering all the big New York Connecticut hedge funds,
Yeah.
who at that time were quite involved in the resources space, and then you had a bunch of specialist mining funds and resource funds at that time. And so, I got to meet all of those guys at that point in time, and 4 or 5 years later, they were all gone, right?
Yeah.
Or largely, pulled back.
Rough spot.
That's there.
Yeah.
That guy called me out of the blue, at the start of last week, and said, "Hey, you know what? In terms of all of the different macro, a whole bunch of macroeconomic factors, you have to go back to that early 2000s, 2002, 2003, 2004 to see a similar alignment of opportunity." So if guys like my friend are seeing that, he's having conversations with people who have a lot of money. And the key piece, in mining, again, we're dealing over crumbs in terms of what, the global assets that are available globally. And so, if all of a sudden some of these journalists start to get, interested, then all of a sudden you go from being 0.05% of assets to 0.1 to 0.25 to 0.5 to 1%.
Yeah.
That feels like a tidal wave of capital that becomes available.
Really
so, it does really feel like we're in the early stages of this, and people have realized, that there is a real fundamental, value opportunity that's here. So I think it'll be quite interesting to see as we, go through the balance of the year how that plays out.
So it sounds like having the right conversations with the right people at the right time, right? So it's, I think that's good. But we've got to get back focused. The original question was right. We're talking about closing of a 39-40 million bucks, right? In total. Your shareholders are going to be interested in what are you going to do with it, right? Because great, we've kind of got a fourth largest project, fifth, top five. We're going to go, right? And a bunch more sitting behind that, right? And we've had conversations in the past about the capex structures, and you've shown how we build that financing stack up, so that thing gets done in that whole alternative financing world, which you and others have had to try and create. But what are you doing in the short term? What is this money for?
Yeah, so the key initiatives. One's permitting. So we had that major milestone last fall with the filing of the impact statement. We went through the last public consultation phase as part of that process. Went well. We got submissions. The 200 submissions. That's nothing that was there was anything unexpected. The agency's going through the review. The next step in that is they come out what's called with a deficiency report. We've anticipated what we think might be there. So far, it doesn't seem like there's going to be any surprises. We'll see, whether it comes out or not. But we've got the data ready to fill that in. And again, we're still on track to be able to get that done by the end of the year. Again, that doesn't happen for free. So there's money involved in that. The next piece is in terms of detail engineering. So we completed the FEED study. So that put us in a position to be able to order long lead items for things like transformers, ball mills, so on and so forth. But again, before you break ground, there's a certain amount of engineering that needs to be completed. So we'll be continuing to advance that as we go forward. And then in terms of the regional potential, right? So we announced, since we last talked, we called results from the three giants, which is Midlothian, Man West, and Reed. We've already published the resource for Reed. We're going to see resources from the Man deposits come before by the end of the month. And again, quite happy with how those are coming out. But again, to complete the resource work that needs to be done, again, doesn't happen for free. And again, you want to be set up to be able to continue to drilling if you want to continue to drill those in the future. And then the last piece is on the downstream business, right? So we've got not only do we have the producing concentrates, but we're going to transform those concentrates into products that can be used by the end market. So the nickel plant and the stainless plant, and so we need to complete the engineering studies on the feasibility studies on those, so that we can catch up with the mine and have everything come together in a nice holistic way. What's interesting with Trump and the discussions we've had today, we've always been focused on the downstream. Prices for commodities in North America across a range of commodities are higher than they are in Europe, and then in turn higher than they are in Asia. So there's basically additional money and value that you can capture by doing that first stage transformation. With Trump in the office now and lots of concern about being able to not have to send material back and forth through several countries in today's web of tariffs, if we can mine it and process it in Canada and then ship it to the United States or Europe to be able to use it, we're in great shape.
Well, let's talk about the Canadian component. I do want to talk about Trump and the impact of that, but Carney, he's promised a couple of things. One is, I guess, kind of walked in on a kind of critical minerals supportive platform, and two, very much promising to expedite matters significantly. One project, one decision kind of territory. So, what do you think that's actually going to look like? Because you're in a permitting process at the moment, a bit late to maybe change things up there. Or is it?
No. I mean, again, for us, we've done very well through permitting, so it has not been a bottleneck for us at all. Again, going forward for the industry, the ability to streamline it, the ability to make anything go faster, and the amount of data that needs to be gathered. We have a team, Pierre-Philippe Dupont, who works with us. This is now, he permitted Dumont, and now he's permitting this project. So, we'll be spending a lot of time with the government to help them, come up with sensible regulations in terms of, how to make sure it works for mining companies. But the thing that's more exciting for us is yes, all the wind window stuff is great, but it's more the Carney keeps using the word pace in terms of restructuring the economy with pace, and so we think that there's going to be a set of a set of projects that come out in terms of priority, where he's really going to focus the government resources. The issue with the Canadian government is not that they haven't announced enough programs. They're running out of acronyms. So we've got the Canadian Mineral Infrastructure Fund, we've got the Canada Growth Fund. There's various pools of money that are out there. They just haven't deployed very much of it.
Right.
So, I think one of the big changes that people are going to see is that money actually going to projects and help them move faster.
There aren't that many projects, though.
No, there aren't that many projects, and that's the best part, right? Is that for those of us who are well through the permitting process.
I just worked out where you're going. Right. Very good.
Who are, who have a lot of, again, who've got great First Nation and community support. You're going to see and have infrastructure in place. Those are the projects that can quickly get done, because the political reality today with Trump in the room is that we need to go. We have a free trade agreement with the United States. We need to. It was scheduled to be renegotiated next year, anyways. So those negotiations begin now. And the reality for Canada is the only cards that we show up with are oil and gas, water, and minerals.
Right.
And so, we will end up with a lot more leverage if we can say, look, we've got uranium, nickel, cobalt, lithium, graphite. All of these projects, are now moving at rocket ship pace. And if you don't want them, if you're going to, play stupid about it, great. We can ship all that material to Europe, or we can ship all that material to Korea, and we can ship that to Japan. So there's a real political incentive and a political driver to really make demonstrable steps forward on that. So, I'm as excited as I have been in terms of what that potential could look like, and what we'll see come down the pipe hopefully in the next 2 to 3, 4 months.
Okay, so the Trump troubles didn't last that long, and there's opportunities obviously for companies like yourself internally, and also with a trading partner like the US next door. So that's back on the table, right?
Yeah. I think any resource, dominant country that has an abundance of critical minerals and then can deliver them,
they're going to make friends.
Trump is the one. Trump's actually been a net benefit for that.
It's interesting. I was speaking to quite a few people who've been sitting around and camped out in DC for the last couple of months, and there was a conversation which happened with George Salamis of Integra. He's a gold company, and they were talking about their project in Idaho, and how do we get things moving? They've got a producing project up here, but they want to get this other project permit thing. Chat. Oh yeah, we're going to get this thing moving here. Right, okay, we'll help you with that. Energy, what are you doing for energy? Oh, we have to George is like, well, we're going to have to, I guess, basically upgrade the current pylon supply to site, etc. The guy goes, have you ever considered SMRs? So this is relatively new to most people, including uranium investors, in the last 2 years. George goes, no, but that's probably got like a 7-10 year kind of permitting process. Try 1 to 2. So the US government is definitely open for business with Canadian companies or American companies and trying to expedite things. So I think that's been the revelation here. So we don't need a pacemaker. We can deliver on pace.
Yep.
In its proper sense. So I think that's fantastic. I got to talk to you about the nickel market, though.
Yep.
Right, because I think we can talk a little bit about Philippines, Indonesia, China, and all that sort of stuff. But the slightly more worrying headline that we saw this morning comes out of Honda.
Yep.
Honda automotive manufacturers and make motors of many different colors and types. They're saying we're going to step back from this whole EV thing for the next 2 years. What's that do for you?
Yeah, so that was their plant in Canada. They were going to build a whole integrated complex, cars, batteries, so forth. Number one, again, EVs and EV sales are a bonus, and
what are they running at?
Obviously, 20% growth per year on average.
Okay.
Yeah.
Okay.
So I think that's the part is, while Honda's claiming it's slowing EV sales, I think that's a way to postpone the project. Let's see what happens with all of the Trump noise.
Right.
Without having to say it's because of Trump's tariffs and getting slapped around by the government for that reason. For us, it doesn't matter. We're designed the nickel plant to be able to take 100% of whatever we produce and push it to the stainless steel and alloy market in the United States or Europe.
Yeah.
And so we're not dependent on the EV market. We can produce for the EVs if they want to pay. Samsung SDI, we've got the option, with the offtake deal with them, but we don't have to give it away. And we don't have to panic if one or two plants don't show up.
And how's stainless steel market right now?
Yeah, continuing. Stainless steel, 300 series stainless production, first 4 months of China is up 12% year over year.
Okay.
So, yeah.
Okay.
Yeah.
So that's not a concern. There's no sort of drop off there in terms of whatever the infrastructure investments are doing across Asia, Europe, etc.
Yeah.
All good.
So I think, that's the benefit of nickel. Unlike a lot of, like some of the other critical minerals, which are effectively solely dependent on how the EV story plays out. And you've got companies that might be designing downstream processing that ties specifically into the EV market. And so if that changes or doesn't show up at the right right amount at the right time, then they're going to really struggle. In our case. Again, as long as you're doing it flexibly, you're not committing 100% into the EV market. We've got complete ability to move our nickel units, wherever we need them. Inco did a great job of that, being able to move nickel units between different applications, and generally the sun is shining somewhere in the world.
So where are you in terms of having to make decisions about where and who you send it to, because it's a big market. So it's something that trades quite easily, right? Yeah. So for you, in terms of getting future funding for build outs and all of that sort of stuff, do you need to kind of get that stuff lined up pretty soon?
Yeah. So again, the product we're going to make can be used by a wide range of customers. So we don't necessarily need to commit to customers.
Right.
However, between now and year end, we want to commit to a couple of customers, and the reason is again, it helps unlock other buckets of money. So the Infravia, the French government program, it has to be potentially used by a French or European consumer. Yeah. And then for Germany, an atom of our product has to be demonstrated to go through a German plant, and again, that is additional funding that's available for the project, on favorable terms. That's there. So in terms of our steel production and in terms of our nickel production, we just want to make sure that we've allocated enough of it to the right consumers and the right market to be able to tap into that financing.
Right. And what else do you think? There's a lot of stuff happening this year.
Yeah.
You've mentioned in this conversation, right?
Yep.
But in terms of the setup for getting this thing financed and then built, what are those kind of pillars look like?
So again, there's the debt and the equity. On the debt side, we announced the $500 million from EDC, another $500 million from a Canadian group. EDC is going to be the mandated lead arranger. So that opens up all the export credit agencies. We still need to go through the next stage of due diligence with them. But again, we're going through it pretty well. When the head of EDC overall gets interviewed by the Globe and Mail 2 weeks ago and specifically mentions Crawford as a project, that they want to get behind, that gives you some sense of the support that that those government financing arms want to provide. So good visibility down that path. On the $1 billion equity, there's the refundable tax credits, which are $600 million. Yeah. You've got the $100 million from Samsung. Yeah. And again, as part of this sort of matrix of opportunities in terms of where we place it, you've got in the order of, $50 million plus from the French agency. You've got, $50 to $100 million potentially from the German agency. We have the Critical Minerals Infrastructure Fund, which would be in the $50 million range. Canada Growth Fund, could be hundreds of millions of dollars potentially of funded support. Yeah. Already in worst case, again, we'll look to sell 10 to 30% of the project, to a partner to do it. The other piece that's happened, over the last few years, again, car companies, battery companies, we're talking about wanting to get offtake because they've got battery plants that were coming, by the, later part of this decade. Well, we were in the early part of the decade then, now we're, past the midway point, right? And so the urgency with which they're looking to get some of these contracts in place is really starting to pick up.
It really is. I mean, like you say, I know you're not beholden to the EV space at all, but it's quite clear that with some of those critical minerals, the need to kind of expedite matters, from governments, from companies downstream even. I know they're loath to kind of go upstream with things, but money's being made available with this alternative financing. It's quite exciting to see, but it's more exciting because I think one of the oft quoted numbers to me was like, from discovery through to production, we're talking 19-year average now. 19.2, I think it was, essentially. So you've bucked that trend. You've bucked that trend because there's not a lot of optionality outside of that Indonesia, Philippines, China triangle. So it's good news.
Yes, very good news. No, I mean, I think, it's again, I'm as frustrated as anybody. It was where the share price is. Again, I've bought stock at $3.50. I've bought stock in the in the $2 range, and to see it sitting in the 90 cents range is painful. But again, we're at one of those inflection points when guys like my friend, who made a lot of money, in New York and lived in the same building as Gwyneth Paltrow, back at that time is getting really excited about.
Yes,
I don't think he bought any products from her, but he is that's a real sign that the money is about to come, and that we're going to get to the end of this very painful cycle and start to make that pivot.
That's fantastic. But it's just the logic and the math behind and the understanding behind that, which is impressive, because these are people who, like you say, couldn't care less. This is this tiny little pimple on the ass of an ox sort of sector. For them to bother to do the work, and I'd like an ex-banker, to get the guys to do the work on a sector like this was hard, because it's like, why would I bother? The fact that they're doing it is they obviously see some gains to be had. That's what's exciting to me when I hear that.
The greedy guys are getting hungry.
The greedy guys are getting hungry, and the greedy guys, so as I said, we got eventually bought out by an American bank, and someone said to me, so are you going to go work for those guys now? And I said, no, they're the best bankers in the world because they know how to make money. But man, it's not necessarily a group you want to hang out with, because it's like a pack of lions descending on a small zebra. But everyone feeds and everyone makes money. So I look forward to that one. Then Mark, good to see you. Good to see you and face to face. And it looks like there's a lot of things to look forward to this year from you guys. It's also everything's falling into place.
No, thanks very much. It's been a good year so far, and best is yet to come.